Good evening, everyone. Thank you for joining this aShareX and Inversion Art webinar, also known as an Ask Me Anything. My name is Ryan Johnston. I'll be your host, and I'm the CMO of aShareX. Our objective is for you to leave the session with a better understanding of the art market, how aShareX auctions work, some information about the artists and the artworks in our upcoming auction, May 2nd, and answers to any other burning questions you might have. Thank you to our audience members for making time to sit with us and for submitting questions when RSVPing. Your questions will be answered during the course of the call. If you have additional questions you'd like to ask, please do click the Q&A button at the bottom of your screen and type your questions and we'll be able to answer them. I'd also like to thank our panelists for joining us and sharing your insights. So without further ado, let's kick things off with some introductions. So Joey, let's start with you. Please introduce yourself to everyone.
Hey everybody, I'm Joey Flores, the founder of Inversion Art.
And Jonathan?
Yeah, Jonathan Neal, co-founder, Inversion Art.
Alan?
Alan Snyder, founder of aShareX.
Kevin?
Kevin Hughes, the Chief Information Officer of aShareX.
And last but not least, Eric.
Hi, Eric Arnsberg, the CFO of aShareX.
Great. Thanks, guys. Let's go ahead and jump in. So, Joey, first question is for you. What was your inspiration for founding Inversion Art?
In 2011, I was super fortunate. I had been running a company for about a year called Earbits, and I got into a program called Y Combinator, which is an investment program in Silicon Valley, where people, it's an organization that invests in tech entrepreneurs and puts them through a pretty rigorous 3-month program with, weekly meetings with mentors and other helpful potential collaborators. And it ends with the ability to pitch a lot of different investors. And quite frankly, for people who know the program, they understand it's an incredibly both prestigious and valuable program to be accepted into, and it changed my life. So in 2020, someone kind of floated the idea that there ought to be a Y Combinator type program for artists. I've been an artist my whole life, never as a professional, but I've always been a very creative person and always have some ambitious creative pursuits. So that just sounded really incredible to me to sort of be able to extend that opportunity to artists, similar to the opportunity I've been extended. Inversion Art is essentially aiming to invest in fine artists, put them through a similar 3-month program and aid them in their careers. We commit to them to support their studio operations for 5 years after they graduate from the program, which gives them a leg up in sort of, being able to scale their studios and do more ambitious things. So the idea of the program is just to back the world's best artists, invest in them, and give them the resources, networks, connections, and capital they need to be successful.
Great. Thank you. And next question, Alan. What was your inspiration for founding aShareX?
Well, having been a lender to the art world for the last 8 years, it struck me as totally unreasonable that we should allow art to be participated in more broadly. And that meant fractionalizing ownership of art and pretty much any other compelling asset. And so we built an auction system to do that. Eureka, it works. Then we struggled and spent 5 months going to and fro with the SEC to give any fractional winners an SEC qualified security. So it's been through the mill at the SEC, and to do it all in a much lower cost way of participating in the art world than is traditionally available. So it's truly trying to democratize ownership of any of these assets.
Great. Now, you talk about fractionalization. Now, what is this is another question for you, Alan. What is fractional bidding and how is it different from bidding in a traditional auction?
Well, a traditional auction is for 100% bidders, where they are going to buy whatever the asset is, let's say it's a Picasso, they're going to pay whatever the ultimate ending price is for that Picasso. We said, gee, why not give fractional bidders, individuals, the chance to compete with each other and to compete against the 100% bidder, all in the same auction. So take the $10 million Picasso. If the bidding opens at $1 million, the fractional bidders enter a bid. And if their bids aggregate to the $1 million, they win that round. And then, let's say it goes to 2 million. They submit additional bids unless they've already entered a limit bid earlier, and so on and so forth until there's no more bidding. And then you see whether it's the 100% bidder that wins or the fractional bidders as a group. Now, the fractional bidders are acting independently of each other. And we thought it was really important. Thank you, Kevin, for doing this. There is, in the screen, you can see how that bucket, if you will, is filling as the fractional bidders are entering their bids. You can see how they're doing in filling that bucket, or somebody, a 100% bidder, comes in and dare I say this, trumps their bid.
Now, what happens, Alan? I'm going to keep you on the hot seat here. What happens to the art if a 100% bidder wins the auction?
Okay. The fraction, let me just paint the dialectic here between 100% bidder and the fractional bidders. If the fractional bidders win, they get a common stock, that Reg A plus security, and that evidences their ownership. And the shares are issued to them and kept in a custodian. If the 100% bidder wins, they've paid their money, they take the asset, the artwork, my Picasso example, and ship it wherever they want, their home, a museum, wherever they want. So that's the key differences between the two. Now, for the fractional bidders, and this is, I won't get into this, it's too much detail, but the neat thing is the art is kept in a secure place, whether it's a museum or an art warehouse, and there are no annual fees, shockingly, for those fractional bidders, the winners, if you will.
Great, thank you. Now, Joey, before we get into the audience's questions, can you please describe for us all what is being auctioned with Contemporary Artists Series 1? Again, this is our auction taking place next Thursday, May 2nd.
For sure. So this Contemporary Collection 1 is 8 works of art by 6 artists that Inversion Art has selected for investment. They are artists that the company plans to invest in, that the company believes are a great investment. They are, very proven up-and-coming artists, award winners, exhibiting with the kinds of museums that tend to lead to prestigious careers. And so what it is an opportunity to invest in a diversified portfolio of art that is still in the ultra contemporary category, which means artists who are still living, who are still working, whose careers are very much still ahead of them. And the idea here is that, as opposed to investing fractionally, for example, in a Picasso, which, may appreciate at a rate of 4 to 12% per year, investing in the ultra contemporary category can, be more risky, but also have the potential for a lot more upside, as, one of the works in this, particular collection would normally retail for $34,000. The idea that it might go to a value of $750,000 over the next handful of years is not out of the question. It's been seen to happen many times in the ultra contemporary category, and we've picked artists who we think have that potential. So this is just an opportunity for people to invest in the ultra contemporary category, but instead of placing a bet on one artist and one painting, they're doing it across 8 works of art from 6 different artists. So it's got a diversification strategy built in.
Great. Thank you. And we have a question from the audience. Where did the low and high estimates come from for this auction? This is a question for you, Joey.
Yeah. So normally when you have a low and high estimate for an auction, it's based on experts coming in and essentially evaluating what they think the value of that work might go for. I'm sure it's affected by, potential bidders and what they've heard from potential bidders and things like that as well. In this case, this is not a Picasso that's being sold by a collector where there is necessarily, a public track record of different sales and things like that. This is work that is being sold directly from the artist studios, which is a little bit different than, 99% of auctions out there. So there is a retail price that is associated with these works. These works, if you aggregate the value of all these works at the retail price of which they would be sold out of the studio, it comes to $158,000. We have set the high estimate at $160,000 commensurate with the retail price. The $120,000 low estimate is based on the fact that we have negotiated with these artists to be able to offer this collection at a potentially lower price than what would come out of a studio. If it were to go for the low estimate, that would be about a 24 to 25% discount against what you would be able to buy these for in the studio. I won't go into lengthy explanations of how discounts in the art world work, but a 24 to 25% discount would really not happen for, in really any scenario, whether it be an institution or a foundation buying a work of art, it would be very rare. But in particular, individual collectors would almost never be offered a discount of that size. So the low estimate is baking in a discount that we have worked together with the artists to offer so that people can get into this collection at a more affordable price. In exchange for that, there is a 10% resale royalty that will go to the artists on any profits over $60,000. So if this collection were to sell for, let's say, $120,000 and it matured to $190,000, which would be a $70,000 gain, the artist would share in 10% of those profits. Which is why they're willing to offer the discount. It also means that they're going to be, committed to increasing the value of this collection over time. So as exhibition opportunities come in for their work, they will certainly remember that these works, are still around and can be exhibited. So borrowing them for museum exhibitions and things like that is something the artist would be committed to doing, which will increase the provenance and the value of the work. Because again, all of our interests are aligned because of that royalty. And again, that royalty is the reason why we've been able to negotiate a better price for these works than the normal retail price.
Great, thank you. And we have another question from the audience. You said that the artists are high potential up-and-comers. What evaluation is that based on? Joey, I'm going to keep you on the hot seat here.
Sure. So, a few things happen here. One, our team, in particular, our advisory team, Jonathan, my business partner here, has a PhD in art history from Columbia University. We have a number of people on our advisory board who are well-known advisors and curators. One of them curates the Michael Ovitz family collection, which is one of the most prominent private collections in the world. One of them, Alan Schwartzman, is the former chairman of Global Fine Art for Sotheby's, and also is one of the more respected fine art advisors around the world. We, have had many conversations with the folks on our advisory board about what sort of leads to great outcomes in terms of investing in ultra contemporary artists. We have, together with them, put together certain signals that we have, we know correlate with long-term art values. Many people who are familiar with the art world would know that if an artist gets into the Whitney Biennial group exhibition, it can do great things for their career. And we've seen through data that tends to correlate with longer high-term art values. Same can be said for people who graduate with an MFA from Yale. So there are a number of signals that, some people may suspect lead to higher long-term art values. We've actually done a pretty heavy analysis of 1,000 artists who have achieved certain types of signals to find out which ones relate to high long-term art values. And then we use those signals as well as, feedback from our advisors and other people to pick artists that we think have very high potential. So some of the things that might affect their, future prospects would be graduating from great programs, getting accepted into prestigious residencies, participating in important institution and, gallery group shows, winning certain awards and so forth. So on the awards front, we have Maria Gaspar, who won a Guggenheim Fellowship in 2022. She's won the Frieze Impact Prize. She's won the Latinx Artist Fellowship, the U.S. Artist Fellowship. In terms of prestigious, museum collections and inclusion in those, the McCoys already have work that's in the Whitney Museum of Modern Art. They have another work that is, likely to go into another prestigious museum soon. in terms of graduating from prestigious programs, Ima Ime, whose work is behind Alan, graduated with a PhD in art and art history from Yale University. Wilfred Ukpong is also one of the artists in this collection, and his work is also, and he also has a PhD. Those are some of the signals that we look for in terms of what we think makes an investable artist. And every artist in this program has either won awards, been involved in prestigious residencies, graduated from important programs, and other things that we know sort of lead to high long-term art values.
Great, that's helpful context. Now, to go a little bit deeper on some of the things you were saying there, Jonathan, question for you. Joey started to talk about some of the artists in this collection. What's one key thing you would say about each of these artists that's being featured in the auction?
It's a really difficult question because it's impossible to boil down the practices of these artists to just one thing. What they do is very rich and very interesting. I think, I want to follow up a little bit on what Joey was saying. I think it's also important to recognize that we haven't just picked these artists for this auction. We picked this work. All artists do a sort of range of work, and some of that might be seen to be marquee or signature work, and other works may be seen to be somewhat secondary. And all the work that's been picked for this auction is really signature work by these artists, right? This is the kind of work that when someone thinks about, oh, what kind of work does Ima Ime make? Parliament 2 is exactly the large scale work behind Alan that someone will think about. Maria Gaspar is an interesting artist, works across various different media. She has a degree in painting, even though a lot of her practice involves performance and sculpture and installations and photography and all these other things. But recently she moved to making a series of paintings that are related to her practice, and we picked one of the best ones for this auction, for this sale. So I think it's important to note that the artists themselves have a lot going for them, but the work in some sense always speaks for itself, and so it's very important to recognize that there's a quality to the pieces that we've selected from these artists that are backed up by what it is that is unique about them. Now I'll just say this, that I think for anybody who's interested in this sale, we were thinking very prospectively. Joey's talked a lot about the educations and the accolades and the backgrounds of these artists. Let me just speak a moment to the sort of what's on the horizon. If I was going to say one key thing about each artist, Ima Ime is in talks for a major gallery solo show coming up in New York City next year. Maria Gaspar has presentations coming up at museums and art fairs in just the next few months. The McCoys have been at work on major work in the Middle East, and as Joey said, have a major donation that's slated for a U.S. institution coming up very soon. Emerald Whipple is about to launch a brand new collection of work that should be done in the next 2 or 3 months, and so we expect to see a lot coming from her. Servan Mary has work that's showing up at the Frieze Art Fair. This just coming up in a couple of weeks, and has work in a major exhibition in upstate New York this summer. And Wilfred Ukpong has his major show up at Autograph in London right now, and is in the process of building out a brand new studio right outside of Lagos, Nigeria, which is going to be the foundation for a whole new extension of what he calls his Blazing Century project. So the artists all have this kind of amazing, even both near term, but I'd say even sort of longer term trajectory ahead of them, which is what is so exciting about having them in this auction for potential investors.
If I could
Great.
just jump in and add
Joey.
one thing, I think we would just be completely remiss if we didn't mention that Kevin and Jen McCoy, whose work is behind me, invented the first NFT ever. And that work sold for $1.47 million at Sotheby's a couple of years ago. So, that's certainly one of the accolades at the top of their resume. They have other works that have also sold at auction for 6 figures. And so, I would say that, that's certainly something that should be known.
Now we have a question from the audience. Jonathan, I'll send this one your way. On the website, what does it mean when you say fractional winners receive a high quality catalog of the art?
Sure. So, along with any kind of, if you imagine a conventional auction sale at a place like Christie's or Sotheby's or Phillips, often come with these, in the past, these heavyweight print, volume bound catalogs of work that would, be sent out in advance of an exhibition. and would be what the potential bidders would use to kind of do their research and think about what it is that they would want to purchase. We've approached things a little bit differently. With fractional investors, you want something that they're going to be able to take away with them and use to share and to exhibit and to show the work that that they are fractional owners of, provided that they are winners of the auction. And so the catalog serves both as a kind of marker of their investment, of their stake in the collection of work itself, but as a high resolution catalog is also something that's going to be easily shared on screens, on a phone, on a tablet, on a laptop, even on your high definition monitor at home, if that's where someone wants to display it, so that when people come over and want to ask about this, interesting collection of work that you've got a fractional stake in, you'll be able to take people through the individual works, have something that's high definition enough so they can really get a sense of what that work looks like and what it feels like, even though they won't have the physical work in their hands.
Great, thank you. And Joey, I have another question from the audience here. Why should I invest in this pool of art versus a share of a blue chip artwork like a Picasso? I know you started to answer this, but if you can go a little deeper on it, please.
Sure. Well, I think, it really depends on like what your investment strategy is, but the reality is that, some bets are riskier and others are less risky. Generally, the less risky ones have lower upside. And so, what we've done here, what we saw was just a gap in the market. When you look at other fractional art investing opportunities, it really is just Picasso's and other blue chip artworks, which have already seen the majority of their appreciation. I mean, a Picasso is already $10 million. Maybe, over the course of 5 years of owning it, it's going to go up, like I said, 4 to 12% per year. And that's great. I mean, there's nothing wrong with that. But what we saw was that, the biggest results in art investing for the past perhaps decade, most of them are coming out of the ultra contemporary category. So when you look at artists like Hilary Pessis, we've got some other examples on the website, they may sell work for $15,000 out of the studio, and 5 years later, it's worth $2.5–3 million. Which is, obviously considerably more higher return than the 4 to 12% that you would get on the Picasso. So the idea here is, look, I mean, it's a riskier bet when you're betting on earlier artists. There's not as long of a track record, but at the end of the day, if one of these, let's say the collection here goes for $140,000, and one of the works in this collection, rose to a value of $750,000 over 5 years, I think, or 6, I can't remember what analysis we put on the website, but, we're looking at about a 32% annual return. So, essentially this is an opportunity for people who want to play in this ultra contemporary category, make a slightly riskier bet, but have a lot higher upside potential. So as opposed to thinking about it like investing in blue chip stocks on the New York Stock Exchange, it's more like investing in 6 startups that are coming out of Silicon Valley, where you would not expect, all 6 of them to perform great over the course of your ownership. But, if one of them hits it out of the park, you're going to do very, very well. So that's the idea here, is that this is a diversified collection of 6 very high potential artists. We're not expecting every single work of art in here to appreciate or even necessarily maintain its value. It's about the 1 or 2 that hit and, grow to considerable numbers. And in that case, the potential for returns is a lot greater than the blue chip artworks that are out there being fractionalized now.
And Ryan, if I could just add to that, I think the other piece of it's important to recognize is that Inversion Art continues to work with and support these artists' practices, their studios and their careers. We're making introductions. We're working with the artists on their exhibitions. We're working with the artists on, the future projects and helping them execute at a very high level. So, as opposed to simply having a sort of asset that one, purchases and then just hopes in the background someone happens to be doing some marketing or doing some PR, or doing some outreach, or doing some, work with what's going on behind the scenes. Every single one of these artists is a client of ours that we continue to help develop and work with in order to see that they are as successful as possible. So this is not just like, buying, a collection of work and then hoping that, maybe one day something is gonna happen to it in the future and someone's gonna want it more going forward. This is about being able to get a stake in a collection of work by a bunch of very talented artists who are also going to have a team behind them helping them execute at a very high level.
Great. Nice add-on. Thank you. And Jonathan, because the audience is asking these brain buster questions, I'm going to keep them coming towards you. So next up, I recently saw an article in the New York Times about erosion in values of the contemporary art market. What are your thoughts on this?
I'm glad you asked this question. So I'm very, Joey's laughing because I've been like hammering away at this behind the scenes, but there are a couple things to know here. One, my colleagues in the arts media are being highly irresponsible, right? There are many different sort of art markets out there, and the writers for ArtNet and the writers of the New York Times have only been paying attention to the very highest level auction sales and worrying about these super expensive works of art that someone decided that they were going to potentially overpay for just a little while ago and are now seeing a little bit of a correction in the marketplace. So, there are many different sides to the market, and we're dealing with, I think what Joey said was the sort of ultra contemporary, which is a slightly different way of looking at it. The other thing that I want to point to here is that this correction in the market that people are writing about is, again, they're not paying attention to the work. They're not paying attention to the pieces that are not being bought at auction that are creating what appears to be a deflation in sales. Good quality work maintains its quality, it maintains its value, and has a tendency to be desirable in the future by future collectors and future investors. And that is what we have here, which is why I made the point about the work that has been selected for this auction. We're not simply selling an artist's brand name, which is what a lot of people were chasing at the very top of the market when you saw now a little bit of a correction up there, because people weren't paying attention to what type of work they were buying. All they wanted was a brand name by some hot artist in order to be able to show off for their friends, and they weren't paying attention to quality. We are paying very close attention here to quality. They may be, not brand name artists at this point, but the work that is available in this sale is exactly what I said before, marquee signature work by these artists, which, as they go on to have great exhibition histories, go on to have incredible amounts of attention paid to them, these will be the works that people are going to be using as kind of signature works. Oh, that looks like, the Servan Mary that you have behind me is going to be the kind of work that people recognize as being a Servan Mary going forward, because it is a signature piece of hers, and not what I would call a sort of secondary work, which is what the folks in the New York Times and ArtNet and other places are not really telling you when they're talking about a decline at the very top of the market. People know quality, collectors know quality, and when, secondary work kind of comes up in the marketplace at auction, they have a tendency to sort of lose out a little bit. That's not what we have here.
Mm-hmm. Mm-hmm. Good answer. Alan, I've got another question from the audience coming your way. What are the expenses I'm paying as an investor? What costs do I incur?
Good steely-eyed investor question. Number one, there is as in any auction, there's a buyer's premium. In this auction, it's less than I've seen in every major auction house. It's 15%. Most auction houses run the gamut for up to 26, 27%. So we decided to do it more efficiently there. In addition, that's the first cost of buying any piece of art in auction, but much less here. Second, we charge, if the fractional bidders win, we charge a 6% sourcing fee. Now, that sourcing fee, you could say, is an expense, which it is, but we will pay the storage costs, the insurance costs, all of the accounting costs. We will deliver to the fractional winning bidders an annual appraisal of the art. So we're incurring all of those costs until the art is sold. Now, that's it. Then, full disclosure always, there is no annual fees, which can, as some of our people I no doubt on the call can eat you alive. In the secondary market, remember, we're issuing an SEC qualified security. We will, over time, set up a secondary market. And this is important. The secondary market will charge on the buy or the sell of the shares 2.5%. Okay, that's like trading stock. However, the one thing that's interesting about any secondary market sales is that there's a tax advantage versus any collectible. Typically on it's like normal stock at 20% capital gains. If you sell the art directly, maybe ultimately that's what'll happen. The tax would be on any gain 28%. So, lastly, at the end, aShareX will charge 10% of any profit that's earned by the investors, the fractional holders. Now, if it's full bidder, let's look at their costs, because I think there's some full bidders that are on the call. A full bidder basically pays a reduced buyer's premium. Long pause. That's it. So, pretty nifty. Now you add up those fees let's focus on the fractional bidders. You add up those fees, those are less than is what typically charged in the art market. So from a cost perspective, which of course impacts returns, it's less. Now it's less than some other noteworthy players in the market, dramatically less than some of the other players in the market. So there you have it.
Can I add two things? One, I just think, I just want to reiterate also that there is the 10% royalty to go to the artists, but that is also the reason why this work is available to be purchased at a lower price than it normally would be out of the studio. It also aligns the interests of the artist to keep promoting the work and everything else. So I think that's important. I think the other thing you mentioned. Sorry.
I think that's good. And I think the artists and Inversion Art were very gracious, and that profit participation for the artist, just to reinforce it, does not start until there's already a $60,000 gain.
Right.
That's important to note.
For sure. The other thing I was going to say is I think that also when you're just looking at these things, again, when you're investing in a fractional Picasso, you're looking at, gains of 4 to 12% per year. If your fees are 1.5 to 2% per year, it's eating significantly into what you might realize from an investment like that. But again, the idea here is that we're swinging for the fences on artists whose works could 30x, 50x, 200x in value. So, go ahead, Alan.
Having lent money against 5 Picassos, and being the curmudgeon that I am, the one thing that I would note to any potential investor in this auction, you're getting, as you said, 6 artists, 8 artworks, and the classic thing in investing is be a diversified investor. Particularly in this case, it's like venture capital investing in art. Very powerful. Now, I will say about the Picassos go up and down in value also. It's not a straight line ascent in those Picasso pricing as the example that we've used. So I would just note that for any potential investors. Go ahead, Ryan. Sorry for taking too long.
Nope, not at all. Good answers. Alan, we have another question from the audience for you. What about sales tax?
Sales tax. On the auction that we did in November, we had researched with tax counsel where to keep the art to minimize any potential sales tax. So the art was shipped to Oregon, where there is no immediate sales tax. We would expect to do the same here to avoid the sales tax at the sale price or when the auction's over, to avoid that.
Great. Thank you.
Go ahead.
Sorry, go ahead.
Nope, that's enough.
Okay. Eric, let's get you involved here. question from the audience. When and how will I get liquidity on my investment?
Thanks, Ryan. There's two ways to get liquidity. The one way was already covered by Alan, which is our secondary share exchange. And the other way, which I won't repeat what Alan said, is through selling the underlying assets. We're going to asset for a max of 8 years. Since as Alan mentioned, we don't charge any annual fees. We can't pay all the costs forever. So at the 8th year, we're going to start a sales process on that asset. In years 6 and 7, we'll have votes on whether the investors want to sell the asset early, the art early. And before the 6th year, if we receive a sweetheart bid, we'll bring that bid to the investors and let them vote on whether they want to start a sales process. So the two ways are the secondary share exchange and then through the underlying sale of the asset itself.
Now, I got to add to it because having been an investor in alternatives for more years than I care to acknowledge, compare and contrast this to most other alternative investments. Most other alternative investor, money manager says, Alan, you're too dumb to know when to sell us. So we're going to charge you 1.5% to 2% a year until we, as the money manager, decide to sell the asset. Holy smokies, gets expensive. And I've frequently said to myself, this gets back to why starting aShareX. Wait a minute. If our investors put up the money, let's talk about democratizing ownership. Let's give them the power that they deserve to decide by a simple majority vote. If the secondary market is trading at a discount to the value of these artworks, great. Let the investors capture that and sell the artworks. Give them the empowerment. How unusual. Anyway, sorry, wow, it's just so powerful.
Now, I have another question from the audience. Eric, I'll give this one to you again. How will I know what the art is worth when I vote on whether to sell in years 6 and 7?
So every year that aShareX controls the art, we're going to have annual appraisals of those works, which we'll post on our website. Additionally, you can look to the secondary market to get comparisons for similar artworks, paintings, and artists to see what the artwork is worth. And lastly, when we open up our secondary exchange, you can see where the stock is trading and compare that to what you see in the marketplace and say, is this something I want to trade today or want to keep for longer term and see if we get more appreciation on those pieces?
By the way, I got to compliment Eric. Eric got off of his deathbed to be on this call today. So his voice is a little more gravelly than normal, but thank you so much, Eric, for rallying to the cause. One other thing I got to add to what Jonathan and Joey have shared about the artists. I was talking earlier, the end of last week, to a pretty famous art expert living in London. He was on his way to Monaco, and we were talking about this upcoming auction. And son of a gun, he said, I know 2 of those artists. Snyder, you got the right people. It was very heartwarming for this rascal.
Sorry, I'm catching back up on questions. Okay. Eric, I'm going to keep these questions coming to you. Question from the audience. What kind of reporting and tax documents do I receive as a fractional investor?
I get all the fun questions, Ryan. You can receive, right? So you receive the annual appraisals done by a third party. You're going to receive SEC documents, which are being reported annual and semi-annually, so twice per year. And you also receive your K-1, your annual tax documentation.
Okay.
I got to ask a follow-up to Eric. Eric, do you expect, while I'm holding the art, that the K1 is going to show any income before I have a chance to either sell my stock in the secondary market or sell the art? Will there be any income?
The way we structured this is that the K1 will be the simplest K1 that you will ever receive. It will, if you do not trade any stock, it will show that what you acquired it at, and there will be no costs, expenses, or revenue associated with the LLC. So that K1 will show no costs, expenses, or revenue to make it quite simple for you to handle during tax season and for your accountants.
Thank you.
Eric, I'll give you another fun one from the audience. I'm debating how to make my investment in this opportunity. I have a pension plan and an IRA. I'd like to invest from one of these vehicles. Are there constraints or restrictions I need to consider?
Again, thank you, Ryan. So each IRA and pension plan are slightly different. If you have a self-directed IRA, usually you have a custodian and need to get their permission to invest in any new assets because they make that investment on your behalf. Again, it comes down to details, particularly in your pension plan, who is a custodian. So I think the best thing to do is to reach out to me at eric@aShareX.com or support@aShareX.com, and we can go through any of the details to get you registered for the lots.
Great. And I have another question, Eric or Alan, one of you two can answer this one. If aShareX is paying all the costs and fees for storing, insuring, accounting, etc., and it is not receiving any significant fees, is aShareX a nonprofit eligible for charitable deductions?
Go ahead, Eric. Have
Sure.
fun.
No. aShareX fully intends to make money. We are not a nonprofit. We are vertically integrated into the auction. So we will receive a buyer's premium when the artwork is initially acquired, whether by fractional bidders or whether 100% bidder. So because of that income, we're able to charge less for the physical custody asset, which, as Alan, I believe, mentioned earlier, is a sourcing fee, which is a 6% upfront sourcing fee. And that allows us to not charge any annual fees. And then, and I think Alan mentioned this as well, when the artwork is sold, we will take a 10% profit participation at the end of the holding period as well. So aShareX does intend to make a lot of money.
Now, one thing that's important, and people ask me this, and some of the people may on the audience know this. We've been an art lender. We've lent money against about $350 million worth of art. Now, because of that, going down that learning curve, we can get insurance rates that I would say are highly unlikely to be achieved by any individual. A. B. We have careful evaluation by our insurance carriers of wherever we store the art. And since we store a fair amount of art all over God's green acre, we've been able to negotiate those fees to a degree that most individuals, even fairly substantial collectors, would be unlikely to achieve. So we're able to minimize those costs, which is important for insurance, for storage, for all of that other jazz.
Great. And Alan, since you're speaking, I'm gonna toss this one your way. This is from the audience. Looking at one of your competitors, what is the cost differential between aShareX and Masterworks?
Ooh, con brio is the question. Masterworks, I have to give them credit. They've been out in the market. We're an exchange, which is very materially one thing that's significantly different. Masterworks acts, God bless them. They've certainly expanded the market. They act as a money manager. Now, when they buy a piece of art, let's say they buy it at auction, they're paying a buyer's premium. Fine. Then let's say they bought an expensive Picasso. They marked the Picasso up by 11%. Pretty peppy. Then, while they're holding the art, they charge 1.5% compounded until the time at which is as my whipping horse is the money manager, until they decide when to sell it. Then they collect the 1.5%. And lastly, they charge a 20% incentive fee, profit participation on any profits on the sale of the artwork. So we're about, I hate to even admit this, we're about 60% cheaper than Masterworks. And the other thing is, Joey said so wisely, Masterworks, is, and again, I say this with respect, they're a marketing machine. They are a marketing machine with aggressive salespeople. They got to pay them, so that's expensive. And that costs a fair amount to support that overhead. So there's some pretty significant differences between aShareX and our partnership with Inversion and Masterworks. I'm not knocking them. It's just different strokes for different folks. And they, as part of their marketing machine, as Joey noted, basically work in existing name brand artists, Basquiat, Picasso, etc. So there's the differences. I mean, will we do Picassos? Yes. Will we do other art, name brand artists? Yes. But we'll do it in a different way, as we've articulated earlier.
Great. Now, Kevin, let's get you into the action.
Yay.
Question from the audience. What if I want to participate in the auction but can't attend the actual auction time? Do I have options to bid aside from during the live auction?
You do. So the way we've designed the system is that for a period of about 48 hours before the auction, you can enter what we've called a pre-bid, which lets you enter either from a fractional or full bid, but I'll deal with fractional first. So for a fractional bid, you tell us how much you want to bid and where you're prepared to bid up to, and we will place the bids for you. There's actually a bit of an advantage to this because the way we've designed our system is that all bids are time-stamped and time has an important priority in the system. So as we're filling a bucket for a particular level in the auction, going to Alan's Picasso before, as the $1 million bucket is filling, the people who've entered a pre-bid into the auction before the auction starts, they go into the bucket first. So there's actually a slight advantage to bidding early. For full bidders, you can give us an absentee bid. The absentee bid will be held and the auctioneer will apply that absentee bid again in time priority alongside as the auction is running. So in both cases, you can bid before the auction starts. I would also say that the auction system works well in a mobile environment. So even if you're not at home or can't be at a computer, you can bid on your phone. So hopefully that answers the question, Ryan.
It does. Thank you, Kevin. And Eric, question for you from the audience. What is Reg A?
Buckle up for this one. Reg A is the law under which we issue investors their shares. What does that mean? It means that it is qualified and reviewed by the SEC and that our financial statements are audited by a professional accounting firm. What does that mean? It means that there's third-party oversight. We have to answer to higher authorities to make sure that everything we're due is correct and above the table.
One thing I want to bolt on, if it's okay, Eric, is that this morning, Eric and I got an email from our able counselors at Buckhalter saying that the SEC had cleared all the final steps, it cleared the offering, so we will have a pre-bidding period 2 days before May 2nd.
Great. And Eric, I have another question from the audience for you. Why does aShareX require my social security number when I sign up?
Okay. It's not that we want to capture your social security number, it's that we're required to by law. When you sell someone a security, you have to run a KYC or know your customer on every person buying that security. And the way you do that for US citizens is by running their social security number. So we have no choice to do that. But we do realize the importance of sharing your social security number, and we make sure that it is stored in all the proper encrypted ways, which Kevin, I'll let you add to that in a second about the best ways that's stored. And then lastly, when we issue your tax documents, again, we need your social security number for that. So it's not something we use, it's not something we share, it's not something anyone in aShareX can see. It is stored solely for the purposes of running your KYC and your taxes. And Kevin?
Sure. I'll talk generally about security for a little bit because it's a really important subject. There are kind of three ways that we approach security: encryption, security, and testing. So encryption, first of all, whenever data is moving from your desktop or your phone through the internet and through our systems and stored in our systems, it is encrypted for the whole journey. So there's no point where anybody can get access to individual data. The second piece is security. We control who has access to any data in our system, and that access is specifically restricted to absolute need only. And the third thing is testing. We do something called penetration testing, which is there are firms out there who effectively try and break into your system and then tell you if there's any problems with it. We do those tests regularly because the best way of making sure that no bad guys get in is to make sure that the good guys who test those things tell us whether we have any vulnerabilities, which we do not, and make sure that if they find anything, then we can resolve them ahead of time. Does that answer the question?
I believe it does. Kevin, going in a different direction, but with the same kind of question. As a technology platform, how do you know the auction system works? What could go wrong?
This is a really interesting subject for a geek like me. The real answer to this is conceivably anything could go wrong. A meteor could hit the planet and something breaks. In practice, what happens is you test. We have tested auctions in the system well over 1,000 times now, with all sorts of weird and wonderful permutations of types of bid, accessing from different places, amounts of bid, the volume of bidding. So we've had many thousands of people bidding all at the same time to prove that the system kind of stands up. Our system sits in an organization called Amazon Web Services. That is effectively Amazon that you know and love. It's their data environment. It's very secure. It's capable of handling untold volumes of traffic. And as I said earlier, we've already tested the system out so that we can handle between 2,500 and 5,000 bidders, all bidding concurrently in less than a 10-second period, and the system kind of handles that. Does that answer the question? I could spend hours talking about it, but I'm afraid I'd put everybody to sleep.
Thank you, Kevin. I think that suffices. Jonathan, I have a question from the audience for you. If I miss out on the auction, can I buy any other works from the artists?
The short answer is yes, but you will not be able to buy these works because these works inevitably are going to go find a good home after this auction is done. Some set of fractional bidders or a single bidder, I'm sure, is going to walk away from them. But if there are people who are interested in these artists and interested in these works, there are works that are available, and it would be best to contact us and make an inquiry as to what it is that someone might be interested in following the auction.
Great. Now, I am seeing that I'm not seeing any more questions from the audience. So I'd like to start by thanking our panelists and our audience for attending. Alan, do you have any closing remarks?
Sure. As some of you know me that are in the audience, you'll laugh at this. I was severely admonished by Jonathan, Joey, Kevin, Eric, and Ryan not to have my usual pacifier, a cigar, in hand. And so if I'm a little scattered, I hope you'll all forgive me. So I adhere to what they tell me to do. Let me say this to anybody that's on the call. Thank you for joining the call. We welcome any of your friends as additional bidders. I say that very pragmatically because if you're going to be a fractional bidder, you want more fractional bidders, the more the merrier, to ensure that the fractional bidders win. And if you're 100% bidder, well, you just may have to bid a little higher. So thank you for joining us. And let me also say this, and I say this with pride. Thank you, Eric. Thank you, Kevin. Thank you, Joey. Thank you, Jonathan. Thank you, Ryan. It is my pleasure to have the privilege of working with all of you. So come one, come all. Start bidding 2 days before May 2nd, as Eric detailed in the pre-bidding period, and go for it. That's all I have. Thank you, everybody.
Thanks, Alan. And if anybody thinks of any additional questions, please don't hesitate to reach out to one of us, either myself, Ryan at aShareX.com, or support at aShareX.com, and we'll be happy to help you out.
Peace
Thank
be
you.
with everybody. Goodbye.
Thank you, everyone.
Thank you. Goodbye.